Hey everyone, welcome back to my real estate series. In today's video, I'm going to share real numbers, exactly how much my rental properties make every month, including all expenses and profits. Now, most people talk about real estate and passive income, but very few actually show the real numbers. So, in this video, I'll break everything down honestly and show you that real estate is not just about monthly income, but about long-term wealth. If you haven't watched my previous videos, here's a brief introduction. I started as a tenant and an immigrant in Canada, and eventually bought my first property. I also shared my journey and some key facts that most people don't talk about. I highly recommend watching those videos first, as they will help you better understand this one. Now let's jump straight into it. Part 1. First property overview. It's a 3-bedroom, 2.5 bath house. My strategy was simple: rent each room individually. A lot of people ask, should you rent rooms or the whole house? Honestly, it depends on your market. For me, renting rooms gave better cash flow. Part 1.1. First property numbers. The purchase price for my first home was $270,000, for which I paid 5% down, which is $13,500. I got an interest rate of 4.5, so the total came up to be $1,600 a month for my monthly mortgage. Part 1.2. The income. I rented out the master bedroom for $800 and the other 2 rooms for $700 each. I rented the basement separately for $1,250. So the total income came up as $3,450. Part 1.3. The expenses. As mentioned earlier, the mortgage is $1,600. Utilities are $500 roughly. Insurance is $100 and property tax is $250. If we total all those up, it comes up to $2,450. Part 1.4. The net profit. $3,450 minus $2,450, which is $1,000 a month in net profit. Part 1.4. The reality check. The profit number is not always fixed. There will be vacancies, high bills in winter, and unexpected repairs. So the profit can change. But these are real numbers, not something just shown on social media. Part 2. Second property. My second property is exactly the same as my first one. It has 3 bedrooms and 2.5 baths. Part 2.1. Purchase details. I bought my second house for $330,000, for which I paid 5% down, which is $16,500. I got an interest rate of 3.2%, so the mortgage came up to be $1,800 a month. Part 2.2. The income. I kept the same price as the first house rooms. It gave me a stable income according to my area. So the total comes up to be $2,200. Part 2.3. The expenses. As mentioned earlier, the mortgage for the second house is $1,800. Utilities are $450. Insurance is $100 and property tax is $300 a month. So the total is $2,650 a month. Part 2.4. Net profit. $2,200 minus $2,650, which is negative $450 a month. Now, my total profit is $1,000 from the first house minus $450 out of pocket from my second house, which is equal to $550 a month in net profit. Now, let me explain something very important here. If I were renting, that money would have been gone forever. But here, even with only $550 net profit, I'm building equity and owning 2 houses, which will grow considerably in next 7 years to 9 years. And the best part, today I own 2 houses without putting any extra money out of my pocket. My properties are supporting themselves. Once I move out and buy my third property, I will rent out those extra rooms as well. And at that point, this property alone can generate more than $1,000 per month in profit. Final part. Key lessons. My biggest lessons. Always research your market. Keep emergency funds and don't overestimate income. Real estate works, but only if you plan properly. So yes, monthly numbers might look small today, but remember, what we are really building is assets, equity, and long-term wealth. And that's what creates financial freedom. If you want to avoid beginner's mistake, check out my video on my journey from tenant to landlord in Canada, for which I will leave a link in the description below. If you found this video helpful, please like, share, and subscribe. and I'll see you in the next video.